Welcome to the Rare Earth Exchanges podcast, where power, politics, and the world's most coveted materials collide. Rare earth elements power the backbone of tomorrow's most critical technologies. With China dominating global production, the U.S. and its allies must align strategically to ensure a stable future. This urgency prompted tech entrepreneurs Daniel O'Connor and Dustin Olson to launch Rare Earth Exchanges, a news and insight platform built to equip stakeholders and decision makers with the tools and intelligence needed to reduce dependency and build prosperous resilience. Let's get into it.
Hello, everyone. Welcome back to the Rare Earth Exchanges podcast. You're joined by me, Dustin, my co-host, Daniel, and we have George Bennett, who is the CEO of Rainbow Rare Earths, based out of Johannesburg, South Africa. George, welcome to the show.
Thanks very much for having me.
Yes, you guys are doing some interesting things with mining and recycling, right? So to kind of get things started right away, we would love to hear a bit of your background and also just how you got started with Rainbow Rare Earths.
Thanks for that. Well, my background starts in stockbroking and investment banking, where I worked for 16 years in South Africa. I became a partner in a very large, successful business here, which we sold to HSBC in 1998. So that was a success. And, after a few years with HSBC and on the board of HSBC, I then decided to leave a big global corporate and I got into mining. I ended up heading up mining research sales and doing some mining investment finance. So I ended up for my sins becoming the CEO of a private gold exploration business based in Tanzania. Took it to 1 million ounces in a year and listed that in the London Stock Exchange. And today it's got 2 operating gold mines. It's called Shanta Gold, so it's been a success. And then shortly after that, I got approached to help refinance a Chapter 11 or bankrupt mining engineering business. They built mines all over Africa. In fact, Lulo, the flagship gold mine of Randgold Resources, which is now part of Barrick, was built by MDM Engineering, the company I restarted. So I was fortunate enough to restart the business with the key technical guys. And in an 8-year period, I listed that in the London Exchange. 2 years later, paid a dividend every 6 months. And we built 22 mines in sort of 9 years, did about 40 feasibility studies. 2 of those were rare earth feasibility studies, so we had some experience in rare earths. And I sold that company to a global engineering business called Amic Foster Wheeler at the end of 2014. And then after seeing that, the pipeline of projects through that I sold with the company, resigned and saw an opportunity in Rainbow Rare Earths, which was listed in London, but needed refinancing. It was trading at about 2.5 a share and helped refinance that, took it over and went looking for a new rare earth project for the company, which was what we found in Phalaborwa here in South Africa. Yeah, so the company's done well, I would guess, since then. Our share price the other day was 27p from 2.5p when I took it over. And we've secured a project in South Africa, a town called Phalaborwa, which is where we're extracting rare earths out of phosphogypsum. Just to give a bit of background, all phosphate rock is mined for the fertilizer industry. So you crush it, you mill it, you concentrate it up into a slurry, which is then fed into a phosphoric acid plant. The phosphoric acid produces a gypsum waste residue called phosphogypsum. There are rare earths present in the hard rock, phosphate rock, but not in economic quantities. But with creating a high-grade phosphate concentrate to feed a phosphoric acid plant, the rare earths are also upgraded in this process. They ended up deporting with the waste stream called phosphogypsum onto 2 waste stacks that we have at Phalaborwa in South Africa of circa 35 million tons now. So basically, it's effectively like a mine tailings project, but it's a chemical processing project because when you produce phosphoric acid, you add 2 key ingredients. You add sulfuric acid and you add heat to make phosphoric acid. And when you crack a rare earth concentrate into a mineral concentrate before you go to separation, you add 2 key ingredients. You add heat and you add sulfuric acid. And these 2 steps were done for us at the Phalaborwa project at 0 cost to the project. So we have a cracked chemical stockpile of 35 million tons, which grades at 0.44% total rare earth oxides, which is very, very high grade for this type of project. And if you compare that to iron clay projects in Myanmar or in China or South America, they grade 0.04 to 0.08% TREO. So that's by order of magnitude 6 to 10 times higher grade. All projects in the mining space are great. There's a term called grade is king. So we effectively a very high grade project. With that, we started looking at the extraction process of the rare earths from the phosphogypsum, and we realized that the sulfuric acid, we just do a direct leach. We extract the rare earths out of the phosphogypsum with sulfuric acid and at a certain temperature with a couple of stages of leaching. And then we go into what's known as a continuous ion exchange circuit, and we produce a very high grade mixed rare earth product or mixed rare earth carbonate, which the market's well aware with, where lots of projects stop at that stage. In other words, Serra Verde in South America is stopping at a mixed rare earth carbonate. They're selling that to China. Northern Minerals and Northern Territories in Australia is just producing a concentrate. They're not even cracking it to a carbonate, and they're selling that concentrate to Iluka in Australia. And other projects are going to mixed rare earth carbonate as well. But there are very few projects that are going to separated rare earth oxides like Lynas in Australia are doing, and MP Materials in America are now going further downstream. So until recently, MP Materials in America just produce a mixed rare earth concentrate, which they were forced to sell to China. That's the only place that could separate or crack it and then separate it further. They've obviously spent a lot of money, and they're now going further downstream, where they're going into separated rare earth oxides, and then they go to the midstream, which is metal and alloy, and finally they want to get into magnet production. So they're going the whole value chain. If I look at Lynas in Australia, the biggest rare earth producer outside of China, since they were in production, I think in circa 2012, all they've produced is separated neodymium praseodymium oxide, which is the holy grail in terms of going to a separated product in the rare earth space. And then they produced what's known as the SEG plus group, which is samarium, europium, and gadolinium, with the heavies in it, which is dysprosium and terbium, which are very critical not only for permanent magnets, but also in defense applications. Lynas have always sold the SEG plus to China for separation. And it's only about 3 months ago in Malaysia that they commissioned their heavy rare earth separation plant to separate the SEG plus themselves. So just to give the audience a bit of a pause there, hopefully that what I'm saying at a high level has made sense to your audience.
I think it has. There's a lot of great insights there with what you just shared throughout the industry and what different companies are doing and how they're doing it. Truly fascinating. Something about rare earths, like they're not truly rare, but they are notoriously difficult to produce. With kind of what you're saying here, from your perspective, what's the real challenge? Is it geology, technology, cost, or policy when it comes to getting rare earths?
I think it's twofold. It's grade. There are very few high-grade rare earth projects that I think that are economic, and I've looked at a lot of projects when I was in my mining engineering business, so I have a good insight into this. And we see a lot of projects. I mean, one of the projects in Australia was talking about, their grade's 0.96% TREO. That's a hard rock project. They've still got a mine, still got to drill and blast, crush, mill, produce a concentrate kit, then, and so forth. So they got a lot of unit operations, and you need high grade to be able to do that economically. Look at Lynas in Australia. The grade of their project's about 8.5% TREO. So just to give you a comparison, that's 8.5 times higher grade. If you look at MP Materials in America, they also circa 8.5 to 8.75% TREO. Also a very high grade project. So you have a lot of projects out there bandied around in the world that they say, oh, they're going to be commercially, they're going to be economic, but they're grading at 1% or 1.5%, 2%. And when you see those companies like Lynas and MP Materials who are on production, who were battling to make money recently before the benchmark pricing was set by the DoD in the US, I battled to see how a lot of these projects are going to come on stream. So that's the problem with rare earths, is that there's lots of rare earths around. Fortunately, there aren't enough projects, I believe, will be economic to go into production. And that's an old adage of exploration. 95% of all exploration companies never go into production. And it's the same with rare earth projects. 5% of all the projects will never see the light of day in terms of production. And where Patabora is different is because we've got so few unit costs to get to our stage where, as I say, we've got a cracked chemical stockpile, is that we definitely are going into production. That's why our EBITDA margin sits at about 75% for our project. We've got a project R&R, post-tax IRR of circa 45%. And we've got a very low capital intensity. We are circa $326 million. And we did some optimization studies at the moment, which I'll be announcing quite shortly, which we believe will have a positive impact on that CapEx number. So we're very confident in our CapEx number, and we've seen a lot of rare earth projects currently being built where they've blown the CapEx number out by between 50 and 100%. which for me is surprising because, having run an engineering company, I don't know how you can be that far out on your capex number, but be that as it may. We are seeing that in the market, and I'm very confident that, because I might add that the Rainbow team, 80% of the Rainbow team all worked for me in my mining engineering company. So my technical director from MDM, my lead process engineer from MDM, my lead study manager from MDM, they're all working for Rainbow Rare Earths at the moment. So we've got a lot of experience within a small company like Rainbow in terms of being able to deliver, because we've done it on behalf of clients for many, many years. Now we're just delivering on behalf of Rainbow for ourselves. And I'm very confident that, I know we're going to deliver, and effectively a very fast track project as well. As you guys will know, many projects take from cradle to grave. In other words, from discovery to production, the average is about 20 years. If you look at most of the Earth projects out there that are on so-called definitive feasibility study stage or pre-feasibility study stage, if you go back to when they were first discovered, on average, they're between 15 and 20 years already, and they're not in production yet. Whereas Palabora, we realized we had rare earths on the phosphogypsum stacks. We got hold of the project in January 21. We started work on it, and we forecast to be in production in 2028, which is circa 8 years. That's a very fast-track project in this space. So when Mr. Trump talks about, we're going to have a lot of rare earths coming out of our ears and flying because of all these deals he's doing, he doesn't understand that these projects take 15, 20, 25 years to come into production,
Oh, George, we just to interject, we write about that because it doesn't, that those kind of comments don't help the industry and don't help the companies, right? Because the companies need to raise financing, and if all of a
Correct.
sudden the messaging is, "Hey, everything's taken care of because we did a few deals," that's a disservice.
It's a complete disservice, as you quite rightly point out. And I know it from my own experience, which is fairly sort of broad, I should say. And yeah, it's factual. You can go into any facts on projects from discovery to production, 20 years on average, and even longer. So when we talk about rare earths in Greenland or rare earths in the Ukraine, even if there were rare earths found tomorrow of economic quantities, it's still 20 years away from production. So the problem with the rare earths are that they suffer from grade, as I mentioned, and they suffer from difficult extraction, because lots of rare earths projects are beset with problems with uranium and thorium. So these are two key ingredients you need to extract out of these projects before to be green and to be able to ship your concentrate or your mixed rare earth carbonate around the world for further downstream work. Fortunately, all phosphogypsum that we've encountered, and we've encountered in numerous other projects, got only trace levels of uranium and thorium, and we don't suffer any of those problems at Palabora, I'm pleased to say. And we have the same with our project in Brazil. So 2 years ago, I signed an MOU with Mosaic in Brazil. Mosaic are the global fertilizer business listed in the NYSE. I think they're about a 15 or so $1 billion business, so it's a reasonable business. And they were happy to sign a deal with me that we're going to extract the rare earths from their phosphoric acid production facilities in Uberaba in Brazil and take the rare earths out of their phosphogypsum. And we're busy with the economic assessment on that project now, the initial study on that project, which we will hope to publish by the end of this year. We'll complete the study by the end of November, we hope, and we'll do a review, and we should be able to announce the results of that study fairly soon. 80 or 90% of the work we've done at Palabora, we've been able to apply to the project in Brazil. So the project in Brazil, we believe the financial metrics are going to be even better than Palabora, and those are already impressive, as I mentioned to you. And this will also be a very fast-track project. So, we're talking about 8 years from cradle to grave for the Palabora project. There's indication that we'll be able to even do it quicker with the project with Uberaba in Brazil. It's also very high grade by comparison to our clay projects. The grade of the project there is 0.52% TREO. Once again, it's all above the ground. It's all in a waste product. There's no mining costs involved. There's no other costs involved. And you've got some hard rock rare earth projects that are trying to sell themselves at 0.55% TREO. You can understand why when you got a project with 60% of your flow sheet is already done for free for you, the metrics of a project like Uberaba in Brazil are going to be very, very good and be very impressive.
I have a question, and I think it's brilliant what you guys are doing, George. I think it fits into the circular economy premise. It's value added. It just makes total sense. Whose idea was this? I know before we started filming, we talked about there was academia that were looking into this. But when it comes to actual commercial rubber hits the road, how did this idea come up and when did that start?
It started in late 2020 when I was approached by the guys who own these phosphogypsum stacks in South Africa. It was an old phosphoric acid plant run by Sasol, a global chemical conglomerate based in South Africa. You might be known to some of your American viewers. But Sasol had mothballed this phosphoric acid plant, and these guys had bought it. And they were using the plant initially for their own purposes, but then they closed it down. And they said, George, we see we've got some rare earths in these stacks. Would you mind having a look at it? So I looked at the initial grab samples that Sasol had assayed, and Sasol had built a pilot plant to look at extracting rare earths from this phosphogypsum around about 2012, because that's when the last rare earth crisis happened, if you remember, with the South China Seas dispute between China and Japan. Rare earth prices spiked. Suddenly there was the flavor of the month. So work had been done on this, but when I interacted with these guys and I realized that, listen, the grade of the rare earths in this gypsum stack looks very good to me when I compare to iron and clay projects. That's when I went and tied up a deal with these guys. And then I brought my technical director from MDM on board straight away. And he said to me, George, look, we know we can extract the rare earths, but why stop at the mixed rare earth carbonate? Let's go all the way through to separated rare earth oxides. So that's what Rainbow are doing. We are doing what Linus has done since they've been in production, which is we're going to produce separated NDPR, and we're going to produce an SEG plus group to sell for further downstream separation. We've run extensive pilot work here in South Africa. We've got our own laboratory. We're building a second pilot plant because we've optimized this front-end leach circuit to bring our capex down. As I mentioned, we'll be making some announcements on that shortly. And basically, we are one of the few projects going to separate it NDPR, and we're also going to produce the SEG plus group. The beauty about producing the SEG plus group, it'll give us the flexibility to look at doing the final separation of that product with the dysprosium and terbium, which is very sought after, I might add. We've got so many inquiries now from potential off-takers just looking to secure the SEG plus group that we could consider doing that final separation circuit on US soil. We could do it on European soil. So it gives us nice flexibility to be able to look at doing that. As I said, we're going to produce 60 tons of terbium, 20 tons tons of dysprosium, 20 tons of terbium. And it doesn't sound like a lot, but very, very high value and very, very critical for these permanent magnets across all applications in the new tech space.
100%. So George, would it be safe to say, in terms of the strengths of Rainbow, it's a low cost, high margin model.
Yep.
It's got compelling economics. It's got that circular component. You've got a net present value of, I think, what, 600 or 700 million.
Yeah.
Almost a 40% return projection.
Yeah, that's just on the Palabora project. That's just on Palabora alone.
Yes. Yeah. So what about the Brazilian project? What does that math look like?
Well, as I said, we haven't published it yet, so I can't say anything other than, as I've indicated, that we feel that the metrics are going to be as good, if not better, than Palabora when we finally announce it. That's all I can say.
Okay. Now let's talk about some challenges. I mean, because this market is challenging. Let's talk about funding. I mean, I know that you have a few different investors. You have some U.S. government funding, I believe.
Yep.
What, would that be one of the more challenging times right now, raising the capital, or is the capital flowing as you need it?
The capital's flowing as we need it at the moment, I'm pleased to say. First of all, on the US funding, that's from the DFC, the Development Finance Corporation. So we've got an agreement they're investing in the Palabora project, $50 million equity for construction. So we are going to need circa $300 million to build this plant. We know the project metrics financials are so strong that we've already started discussions with various banks. It'll support 2/3 debt. So we're looking for $100 million of equity. $50 million is already coming from the DFC. So that means Rainbow's only looking for a $50 million equity funding when we come to construct this project. And our target timeline for construction is still circa 2027 to be in production in 28, as I mentioned to you guys. So we also have a Topco in Rainbow, 12% owned by TechMet, a critical minerals fund that's funded partly by the US government, partly by the Qatari investment fund. and so forth. So that Critical Minerals Fund with a lot of US funding, and they've got 12% in Rainbow Topco, and the DFC $50 million is coming via TechNet into Rainbow. It's been
Right.
allocated already.
Yeah, that and it's impressive. You have impressive investors, so you're well positioned overall. What is some of the biggest risks you see? I mean, pricing. Are you going to be able to benefit on these floor prices that are kind of being established? Can you talk a little bit about that? How that's unfolding from your vantage?
Yeah, so I've been saying publicly, and I said this in the public forum in Toronto and Adamus Conference, Rare Earth Conference I spoke at last year. I said, guys, we need floor pricing in the rare earth market because we're not going to see, projects can't get going at these Chinese prices, and we need floor pricing, and we know the Chinese are manipulating the pricing. I'm pleased to say I said the same thing when I was in Montreal at another rare earth conference earlier this year when I was talking to potential off-takers, and we were seeing a lot of interest from potential off-takers. This was a June conference in Montreal when when I was saying to those potential off-takers, and these were South Koreans, Japanese, European, as well as US potential off-takers, that, guys, we're going to need to negotiate some kind of a floor price. Literally a month later, I was vindicated when the DoD announced the MP deal. And then we've seen the Australian government say that they are going to entertain floor pricing for critical minerals. And we've seen some other European government noises saying that we think we will entertain floor pricing. So I believe the MP deal was critical for the market. It has set a bench scale floor price. And we are in various offtake discussions, and we obviously are trying to use that benchmark floor price as a starting point. And there seems to be an acceptance now in the industry that there's going to be some kind of floor pricing. Whether everybody can secure 110 or not is a different matter, but I do think we will see much higher floor pricing set. And we've seen it in neodymium and praseodymium, as I said, with the DoD deal. But in Europe, for the last 6 months, the tariff war started with China, and we saw dysprosium and terbium trading ex-China in Europe 3 times higher than the Chinese pricing. And that's been consistent for the last 6 months. So we've seen a bifurcation pricing. And I believe that's here for the longer term.
Well, I do have a question though, George. So, we've tried to be very careful. So that deal with MP and the DoD, that did establish a floor price between DoD and MP. There's been chatter, government officials have said, oh yeah, we're going to have a floor price. But I have not seen, and you correct me if I'm wrong, I have not seen hard industrial policy declaring that across the board.
No, you're quite right. And that's why I said, I don't know if that DoD deal is going to be replicated with other earth companies in the US, but certainly with potential off-takers, be they Korean or Japanese and so forth, they do recognize that the Chinese pricing is not the right pricing. If you want security of supply, you need to see higher pricing, and you need to have some kind of floor price. I'm not saying it's 110 for everybody around the world, but I think it will be higher than what we're seeing. And I take this from the uranium experience. So as a group at Rainbow, we built 2 uranium mines, and we did a number of uranium feasibility studies. And when I sold the engineering company in 2014, we were building the Berkeley Energia uranium plant in Spain. And when I did the bankable feasibility study for that project, spot price for uranium was $20 a pound. But the contract price for the bankable feasibility study was $45 a pound. So the nuclear power plants weren't worried about spot pricing because that's not where the market volume traded. The volume traded on the contract price. And they recognize if they want security of supply for their uranium plants, they had to pay $45 a pound. Of course, right now uranium's at 80, so that's a good price. But that was in 2014. And I've said that the same principle or logic needs to apply in the rare earth market. If you want security of supply, there's a certain price that you've got to accept for material for companies to be invested in and material to come onto the market.
I agree. I fundamentally agree. And we're, George, just so you know, we're pushing our audience and our reader base is growing. A lot of people from Washington come in. We're pushing these narratives because we understand, the Chinese are going to manipulate this situation.
Yeah.
Right now we track them very carefully. Those companies over there, those state-backed companies are expanding capacity. They're putting deals together to be more efficient and to have more product, right? Because ultimately they're going to flood the market.
Well, I think ultimately they want to flood the market with their manufactured goods. That means they
Yes,
need they need the rare earths for their own internal consumption, for robotics, for drones, EVs, plug-in hybrids, wind turbines, you name it. And
absolutely.
I'm very positive on the next frontier of demand for permanent magnets and rare earths is going to be driven by robotics and by drones and air taxis or EVTOLs, electrical vehicle, vertical takeoff and landing vehicles, which require a lot of permanent magnets in them, far more than what we see required in EVs. And so the demand for rare earths on the macro front is very, very positive. And I think to get that security of supply, if you want to build robots in the West and these other types of technical products in the West, you're going to have to accept that you need a floor price to enable companies to go into production.
We absolutely agree. Now, on the topic of downstream and markets, like how much is Rainbow going to get involved with downstream? Are you going to use off takers and third parties and magnets, or are you going to also work directly with OEMs and drone and humanoid manufacturers?
It's a good question. We personally are not going to go into permanent magnets. It's a very, very difficult market.
Yeah, understood.
Very high tech. And we're not going to go into the midstream, but we are happy to be part of a supply chain. In other words, I've got a letter of intent to supply separated neodymium praseodymium oxide to LCM, which is Less Common Metals in the UK. You've just been acquired by USA Rare Earths.
Yeah, that's right.
And that agreement's still very much in place because they are going to expand on the back of their takeout by USA Rare Earths. They're expanding in Europe. I know who they're expanding with in Europe. They're going to be expanding in the UK, and they are going to be expanding on US soil. So they're going to need more product, So we would be very happy to be, we're not going to do it ourselves, I believe, but to be part of that strategic supply chain to say that the permanent magnet manufacturers need the LCMs of the world to supply them with their not separated, their alloys for magnet manufacturing, and then they in turn need upstream supply to feed those businesses. And, we're talking to a couple of guys in Europe as well about that. And at the same time, we've had OEMs talking to us who have arrangements with their permanent magnet manufacturers and so forth. And they're saying to Rainbow, look, we want to investigate if we can enter some kind of offtake agreement where we can guarantee supply for our midstream sort of partners and our permanent magnet partners so they can expand, be it in Europe or be it in Japan. So, we will be part of the supply chain. I don't want to do it myself, to be honest with you. I think we can be pretty good at producing the separated NDPR and the ECG Plus group, and then we'll let other guys that we're happy to partner with to do the midstream and then the final downstream.
Makes sense. That does make sense. Do you see as your biggest challenge? What keeps you up at night at this juncture, looking at the market? You've executed very well, but you're not a person to rest. I can tell that. What's keeping you up at night right now?
Well, two things. We were looking at using continuous ion chromatography for the final separation process at Rainbow. And recently we started looking at solvent extraction, which is the gold standard. Because we've had so much success in incorporating CIX, the continuous ion exchange, into our flow sheet. And as I said, as a team at Rainbow, we've designed and built uranium plants that use both continuous ion exchange and solvent extraction in them. So we're very familiar with these processes. So the market knows we've very successfully adopted the CIX into our flow sheet, and that's produced a volumetric reduction and pregnant leach solution going into the CIX to feed the final separation from 340 cubes an hour to circa 5 cubes an hour. So that's a 300 times reduction in volumetric flow. Because of that, we recognize that that would mean that we would potentially have a very, very small solvent extraction circuit. So we are evaluating, as we mentioned in our year-end financials, which we published on Monday, yesterday, that we're looking at both options. So we'll be making an announcement on that very shortly, which I believe will be the final de-risking step for Rainbow. As I said, we know the two options and the gold standards SX. We'll make a final decision very soon. And then, so it doesn't really worry me, but has been a concern. And lastly, it's just the timeline. We've been optimizing our front-end flow sheet, which we believe will bring significant capex savings, which will announce hopefully those positive results soon. And we we use a delay in our DFS that we told the market about last year to do these optimization studies. So for me, it's just a slight timeline is that keeps me awake, where I can make the timeline. I know I'll deliver. It's just the timeline. And I'm being, this with your audience. But once again, I've seen it. If I use the Sierra Verde project in Brazil, they rushed their flow sheet. They built a plant, which is giving them huge trouble in Brazil. They've had to stop that plant, re-engineer it. It's costing them hundreds of millions of dollars to redo that, re-engineer that plant in Brazil. Because of the strong technical background of the Rainbow team, we've always said, guys, we might take a little bit longer, but we'll do it right, because it's far more important to get it right than to rush something and get it out 6 months ahead of schedule, and you haven't got everything 100% right. And because at the end of the day, and we've used this delay in the DFS to optimize our capex. So yes, there's a delay, but we've got a positive outcome from the delay, which I believe we'll be able to announce, which is a positive improvement in the capex and opex, and obviously that'll help improve the EBITDA margin, which is already fantastic, and help improve the IRR and so forth. So those are the two key things. But in terms of being able to deliver, I know we're going to deliver. We're going to build this plant.
And that's really helpful. And the DFS, I believe it's delayed to 2026, and it'll probably be wrapped up when? End of 2026, early 2027?
No, before then, because we're on target. We're still on target to start construction during 2027 and production in 28. So yes, there's been a delay, but we're running a lot of processes in parallel to reduce the impact of that delay.
Right. Makes sense. Dustin, any questions? This is really, really informative stuff, George. We're really grateful.
Thank you.
Yeah, very informative. And we are coming to the end of our time here. So if we were to fast forward 5 years into the future and we meet again, what does success look like for Rainbow? What do you hope to be seeing in 5 years?
So we will be producing between our 50% of Uberaba and Tanaboa, circa if I include Uberaba, but we'll only have 50% of the economics. But we'll be producing circa 4,000 tons of separated NDPR oxide per annum, and 3,000 of those tons we'll get the economic value for, and we'll be producing circa 120 tons of dysprosium and about 40 tons of terbium, which makes us a significant heavy rare earth producer. And we will be separating at SEG plus on US soil. And if we achieve that, we'll be a $5-6 billion business. Billion dollar business.
Yeah, that's great. Very exciting.
Because I look at Linus, where Linus are in terms of their production, I look at NP Materials in terms of their production. And remember, our margin being at over 75% EBITDA margin, we don't have to produce as much as them to be far more profitable than them. We are independently verified by Argus Media as well as Benchmark Minerals. We are in the highest margin quartile, second highest margin development company in the world today in terms of EBITDA margin. And we're at the lowest cost quartile. So we are even below Chinese cost of rare separation, which I don't think there are many projects that can claim that. Because, as I've mentioned, 60% of our flow sheet is at zero cost to both our project in Brazil as well as our project in South Africa. So we're very high margin business.
And can I, Dustin, slip in a quick question? Just on that note, it's because of this methodology that you have refined with the recycling of these underlying products, correct?
Yeah.
Are there other groups doing that? Or are you the only group in the world doing this at scale, at the current scale?
We're the only group doing it at scale at the moment. We have been approached by a group in Canada, a group in Europe, as well as the Moroccans and the Saudis to look at extracting rares from their phosphogypsum waste residue as well. The beauty about what we have in Brazil and in South Africa is that the source of that phosphate rock mined originally is what's known as a hard rock carbonatite. So the grade of the rares in the hard rock is circa 10 times higher grade than we see in sedimentary deposits of phosphate. So phosphate producers in Florida, in Morocco, India, Saudi Arabia tend to mine marine or sedimentary sources of phosphate rock, and they are by nature a tenth the grade of those projects that we are currently involved in. So there are other opportunities, but we are focusing on the hard rock phosphate sources of phosphogypsum because we know the grade is very high and economic for the type of extraction process we've got.
Makes sense. Dustin.
George, thank you so much for being on the show. We appreciate your wealth of knowledge and the insights that you've shared with us. Truly fascinating. And we would love to have you on the show again just to get an update from you and see how things are progressing with your venture.
Well, I would love to be on your show again. It's been a pleasure talking to both you guys. I appreciate the time you've taken to interview me. And hopefully, as you say, I've given you guys some insight, not only to Rainbow, but the market. Yeah, I started with zero knowledge in 2019. So over the years, I've learned a little bit. I ask a lot of questions. That's how I've always learned. The same as when I was running an engineering business. I'm not an engineer, but that seemed to go okay.
No, well, it definitely shows. You seem very knowledgeable. So with that, we'll sign off here. And thanks again for being here.
No, pleasure. Once again, thanks, Scott.